Hi, everyone. Thank you so much once again for taking the time to actually watch our video. And as we've been learning about debt management, we're going to be continuing on that series. So today will be the last lesson that we're having today on debt management, which specifically focuses on products and the different types of credit products and when you should utilize that particular credit product. As normal, I will then be switching off my camera so that you guys be able to pay attention on the presentation that I have put together so that we can learn. And then, of course, if you have any questions, please always reach out to us on our socials and be able to actually learn as much as you can when it comes to personal money management. Let us kick off. All righty. Hey, let us begin. Okay, just as a recap on our lesson, our previous lesson and mentioned today, we're doing the last lesson on debt management, and the topic we're focusing on is understanding credit products. So just as a recap on our previous lesson, how to minimize debt, right? The first thing we were talking about was, of course, the first step was assessing your current financial situation, where you need to review all your outstanding debts, create a priority list for all the high interest debts. So this, remember, we did this just to ensure that if we're trying to pay off debt, it gives us a great opportunity to be able to actually see what debt we need to pay off first if we created this priority list, and it becomes part of our financial goal to minimize debt. So we need to have a plan that we put in place. And this was one of the steps to help us achieve that financial goal, and a strategy that we've put in place to help us meet that goal, right? And then, of course, step 2, setting debt repayments, right? Setting debt repayment smart goals. All right. Then we say that when you create a plan, right, remember, to reach your repayment goal, you need to use the SMART goals rule. Remember, what is the SMART goal rule, right? We first said it was make sure that your financial goal is specific. It is measurable, it is achievable, relevant, and it has to be time bound. So, for example, if you say you want to pay off your credit card debt, that is specific. It's measurable. How? Because you already know the amount of money you're owing on this particular debt, and you already know that. Is it achievable? Yes, it could be. It can be achievable based on this the strategy that you're using. So if you've got 50,000 Rand credit debt that you need to pay off, you need to then make sure that you're making monthly contributions towards this particular credit card debt to ensure that it is achievable. And is it relevant? Yes, it's relevant because it speaks to your personal financial goal of reducing debt, and one of your credit card debts being high is helping you reduce that high interest credit is part of your financial goal, and therefore it is relevant. And is it time bound? That's another important one, right? If you're going to be setting goals of any sort, if there's no time stipulate, or a period that you've stipulated to say that I want to reach this particular goal at this particular time, then it does make things a little bit challenging for you to make sure that you achieve this goal. So it's important to then, of course, set some form of a time frame as to when you want to have this credit card debt paid off. All right. So to start off with our lesson today, understanding credit products, right? So as we have, various unsecured lending products, and to be focusing on unsecured lending products, because I think that secured lending products, which we covered in our second lesson, and first lesson briefly also, is that with secured products, remember, with secured lending, we know it's either home loan or vehicle finance. So there's always an asset that is attached to that particular loan, at that point in time. So with unsecured lending products, remember that we said that these are products that are not linked to any form of asset. There's no asset that is attached to this product. So these are your credit cards, your overdrafts, your loans. And so today we're actually diving a little bit deeper when it comes to these credit products. just to understand the different types of these unsecured lending products. And the two that I wanted to discuss is installment or revolving credit products. And it's important for us to be able to understand which product is relevant at which time, right? So an installment credit product. So this credit product is more or less a product where you would be paying it off on an installment basis every single month. It has an end date and it has stipulated terms and conditions and per the agreement that you've signed. But ideally, it has some form of fixed installment that requires you to make monthly contributions towards every single month, right? That is how you know that that particular product is an installment credit product, okay? There's a fixed installment amount, meaning it doesn't vary every single month. It's the same amount of money you'd be paying every month unless the interest rate changes. And then, of course, your installment will be affected by the interest rate if it's linked to prime. And then that might actually change or make the interest, your payments in towards that particular debt fluctuate. However, the amount of money that normally you'd pay for this particular installment credit product is normally fixed, right? And then revolving credit products, right? Revolving credit products, like the word revolving, it just merely means that it has no end date. Unlike installment credit products that have an end date, the revolving credit products don't have an end date, right? So that means that that particular credit product is continuous. And we say that the word we normally use to say that it's perpetual, right? Because it does not come with an end date until you go to the bank and say, hey, can you guys cancel this particular credit product? I no longer want to have this particular product under my profile. Then that process will then be initiated for you to cancel the credit product, right? And yes, as stated, it does not have any fixed number of payments because, like I'm mentioning, you're not paying towards reducing the balance. The balance is there and it's continuously available for you to use it every time you pay it. All right. Okay, so let's just get a bit more understanding between the difference between installment and revolving credit products. And if we look at if we're looking at the installment debt products, right? We look at three examples here. We've got a personal loan, a student loan, and a micro loan. Personal loan, right? Remember, a personal loan, this is in a situation you go to the bank, you need to, for example, you want to purchase a vehicle, you need a deposit for that particular vehicle, you'd go to the bank for a personal loan. You want to get married, you need to get funds, you need to have funds to pay off maybe buy your dress, or you have a shortfall of sorts, you'd normally go and get a personal loan, right? So with a student loan, specifically for students, be it if you're studying towards furthering your education, right, then this option is available for you to be able to utilize at any financial institution that offers this particular product. And with the microloan, normally microloans are actually classified as loans that are nothing more than 5,000 Rand. So anything between 1,000 and 5,000 Rand is normally considered a microloan, right? These are the type of loans that you can even actually access them via the ATM, right? When you put in your bank card in the ATM, sometimes a little message pops up and says, do you want a microloan, or you qualify for 1,000 Rand or 2,000 Rand a microloan, right? So just to understand the difference then, when we were talking about the installment, and what we mean about installment is that, for example, a personal loan, when you get your contract for that particular personal loan or the agreement, it has a particular end date, meaning that you have applied, for example, a personal loan for 24 months, which means if it's 24 months, today is the 21st of the month or the 22nd of the month, then it means that it would be the end date would be the 22nd of the 2025, June 2025, right? Then it means that is a full 24 months. And by the 22nd of June 2025, yes, 2026, sorry, 2026, then it means that that loan needs to be paid off, right? But what you need to also remember with personal loans and student loans and microloans is that just because there's an end date that you had signed to say that I'll pay this loan off in 24 months, in 30 months, in how many other months that you had agreed upon. It does not mean that you cannot pay off that loan quicker or sooner, right? So it means that as long as you pay off the loan, right? Because tomorrow you could win the lotto, and you're not going to say, oh, I can't pay off my loan because I had agreed to 24 months. No, you can still pay off the loan sooner than you had initially agreed to, right? That option is also available. If we look at credit products, right? So some of these revolving credit products that I wanted us to discuss is the credit card and the overdraft, right? Some people don't necessarily understand, especially with a overdraft. We'll start with the credit card in this instance. So the credit card, of course, you just know that it will be a separate card from your debit card, right? Or even though you can have one of the credit card linked to your debit card, you can do such. However, with the credit card, it's merely saying that there's money that is credited into the specific card, let's say 10,000 Rand. However, I have an option to pay off that 10,000. But when I pay that 10,000 off, it does not mean the credit card is canceled. That is different from what actually happens with the personal loan. The personal loan has an end date, which means when you pay off the loan, it's no longer available for you to access those funds because you've paid it off. That's why they say it has an end date. But with a credit card, that product is revolving. And we say it's revolving because if you had 10,000 Rand on this credit card and you used it, you paid it off, that 10,000 Rand is also available to you again for you to reuse it, right? So that's why we call it revolving, because every time you repay it, the amount of money that you have repaid or contributed to the credit card is then readily available for you to utilize again, which therefore makes the product revolving, okay? An overdraft works the same also, because when you get the money with the overdraft, but then you can pay the money back onto for that overdraft, and meaning that your check account, right? Because an overdraft is not a separate account, but it's linked to your check account. Unlike a personal loan where you go to the bank, you get a personal loan, and the loan opens a separate account. A credit card, you get a separate card where you now have access to this card, access to the funds through a card. An overdraft, on the other hand, is linked to your check account. Therefore, you cannot have an overdraft if you have a savings account. This facility is only available to individuals if you have check accounts, right? And what it means is that with an overdraft, this is a facility that is made, or it's predominantly actually utilized for assisting individuals who tend to not have enough funds in their account for whatever reason. And the bank gives you an overdraft so that your account is not overdrawn, right? Overdrawn meaning that your account doesn't go to the negative because you've got debit orders that are going off and there's no money in your account. When you have an overdraft, that overdraft caters for those debit orders in situations where you don't have funds in your account, right? So if you've got, for example, debit orders that go off on the first of every month and you forgot and you've got 1,000 Rand overdraft on your account, if your debit order is going to be maybe 500 Rand, that debit order will be successful, or it would be honored by the bank because you have an overdraft of 1,000 Rand, right? Which merely says, bank, can you please honor my debit orders up to 1,000 Rand if I don't have money? That's basically what you're saying with an overdraft facility, all right? So we're also just going to go through a few examples to just better illustrate these type of products and to ensure that everybody understands what and when do we utilize these products, right? Because it's quite important to have a better understanding, especially when people tend to actually go to the bank and borrow money without understanding the uses of that particular product. And that's when you start seeing people then finding themselves in tough financial situations because they've got all these different products and that are not right for them, okay? So it's important to make sure that whenever you require any form of financial assistance from the bank, you have the conversation with the consultant that you're dealing with or whomever is assisting you at that point in time, so that you make the right decision when you're making that decision around which credit products to then take at that point in time. Because whatever credit product you take, and if you take the wrong credit product, or you utilize a credit product that is not meant for what you're trying to use it for, then it's going to be detrimental to your finances. And the reason I say this, I've seen in situations where people will have their check accounts always overdrawn, right? They've got, for example, an overdraft of 50,000 Rand. And now it's like their check account is always on a negative balance because they've never had 50,000 Rand or more in that account so that they can be able to go back to a positive. But those are kind of situations where as an example as to when people utilize the wrong product for the wrong reason, right? So let's first go to the example that we're going to look at first. So here's Sandra, is a 30-year-old hairdresser, and she has a small business. Right away, she struggles with her clients, right? So, of course, I mean, as a small business owner, you're always going to have those kind of challenges where people don't pay you on time, right? So, she sells hair, right, as a hairdresser, and she sells weaves, these beautiful weaves that people purchase from her. And unfortunately, some of her clients don't have the finances to be able to pay upfront for these particular weaves. So, what she then allows her customers to do is to pay monthly installments. And some of them, unfortunately, they miss the payment. And then Sandra finds herself in a situation where she's now cash strapped, right? Meaning she doesn't have enough finances to be able to pay for her debit orders or buy groceries or just, make ends meet for the month because she hasn't received any payments from her clients. So Sandra goes to the bank to just see what kind of credit product can she utilize. And in this instance, I'd advise Sandra to actually consider taking up a credit card, right? Remember, the credit card in this instance, a loan would not make sense because a loan is normally a kind of a credit product that is designed for you to utilize and pay off, right? Because it has an end date, right? It's not revolving. And in this situation, as I mentioned earlier, that when you take up a loan, it's normally taking up a loan because you need to purchase something or you need to pay for something once off, and then you'd quickly take a loan to be able to assist you with the shortfall. However, if you are going to try and solve a situation that requires monthly access to finances or potentially have monthly access to finances, then you need something that is revolving. So it's this situation that Sandra finds herself in. It does not mean that she's not going to find herself in this situation 3 months from now, or next month, or 6 months from now. So it's going to make sense for her to get a credit card, because if she goes and gets a credit card from the bank, it then means that she will always have this credit card to utilize in situations where people don't pay her in time. And the other reason I like the credit card for this particular situation, it's because with the credit card, she'll be able to go and buy groceries, pay for electricity, maybe pay for her suppliers, because that's money that she has on that credit card, and she can utilize that money for whatever she pleases at that point in time, right? All right, so I think that better explains why she would rather take a credit card versus a loan. Okay, and the overdraft in this instance does not make sense because it does not cater for what her need is. Her need is currently to be able to have access to money when her clients do not pay her on time. So the credit card would serve that purpose well as revolving credit. So the next thing that Sandra would have to do would have to make sure that she's taking an amount that is within her budget, right, and her affordability. Because the purpose of this credit card is not for her to go on a shopping spree, nor to go on vacation, but to just merely take care of the shortfall that she might have during the month when her clients don't pay her on time. So be it if she needs to take up a credit card of 5,000 Rand, a 10,000 Rand, depending on her affordability. That is what and how she should make the decision in terms of what the amount should be for this particular facility. Okay. Then the next example, here is Theo, all right, and he's also self-employed, okay, and he runs a plumbing business. So unfortunately, yes, his clients also don't pay on time. Oh, these poor little business people, challenges of being a business person, unfortunately. So which then leaves Theo with a bank account with a negative balance. So you see, Theo's situation is slightly different from Sandra's because Theo is having a situation where because he doesn't have enough funds in his check account, right? Then it then leaves him with a situation where his debit orders are not being honored because there's not enough funds, or normally you get that message that just says insufficient funds, right, on the account. So that's the situation Theo finds himself in, and that is why when he visits the bank, I would then advise him to rather look at a credit product, which is an overdraft, because the overdraft would then serve that very purpose. So he can say to the bank, guys, can you guys give me a overdraft facility of 5,000 Rand, depending on affordability and depending on the amount or of the debit orders that need to be honored. Because if his debit orders that get returned only amount to 2,000, then there's no need for him to have an overdraft of 5,000. He should just maybe keep the overdraft at 2,500, right? Just 500 Rand more than what he really needs, right? Just as a safety net also. So this then assists Theo in situations where his clients don't pay on time, and it allows him to be able to cater for those debit orders without having any debit orders that are not honored. Because yes, as you know, guys, if you don't pay your creditors in time or on time, what tends to happen is that they could list you on the credit bureau, and you could actually find yourself in hot water when it comes to your personal finances, which then gives you a bad credit record, and then it makes you a risk for banks to actually borrow you money. So it's important to try and take these type of advices when it comes to managing your personal finances, as well as maintaining a good credit record, just by making sure that you honor all the debit orders that you have as your obligations, right? And I think these two examples that we've gone through and what we've spoken about regarding the difference between a personal loan and a credit card and overdraft, it just better illustrates when and how you should actually think about what you should be thinking about, especially when you want to take out some part of some form of credit product within the financial institutions. So, like I said earlier on the video, is that if you have any questions, or you'd want to actually contact us for questions and more information around personal finances, then definitely do so. But yet again, I just want to say thank you for taking the time to watch this video. Please like, share, and follow us on our social media handles so that you can be able to learn more when it comes to personal finances. Thank you, guys. Bye.